Constellation Brands hitting a new all-time high this week after the beverage giant wrapped up the year with strong fourth quarter results. Revenue and profits both up double digits, Simon. And speaking of dividends, they raised theirs.
You know, this story made me raise a couple eyebrows. Two eyebrows.
How about a glass?
More than
Do you have a glass?
Do you have more than two?
Yeah.
Maybe you have just one? Do you have just one?
So they acquired Prisoner Wine, right, which was an addition to Ballast Point, which we acquired last year also. And all of these acquisitions they're making are immediately accretive to earnings, which looks great on the income statement. But it shouldn't be that easy for a brewer to just go out and immediately make acquisitions that are immediately accretive to your income statement like this. And you look at this, and there are brands to these beers, but they're also loading up the balance sheet with a whole lot of goodwill. When a company goes out and pays a price to acquire a company that's larger than the fair market value, you take goodwill on your balance sheet. That's an intangible asset, and goodwill is now 42% of the assets that are on Constellation Brands' balance sheet. So I think there's a little bit of a risk to this strategy. It looks great from the income statement, and Wall Street applauded the news, but I'm a little wary.
Just comparison's sake, Chris, is anything above 40%, I think that's where a lot of fundamental investors start to think that may be a little bit too high.
Yeah, I mean, we talk about goodwill a lot. I think we probably run Microsoft through the ringer on this once or twice. But the problem with goodwill, it sits on the balance sheet forever, hopefully, and it's not a problem. But if it becomes a problem and you have to take a write down on that goodwill, if it's suddenly deemed that those assets aren't worth what they maybe once were, then that flows through the income statement. It affects the company's earnings, and that's where the bad news starts coming in. So it looks good now. It could be a problem later on, and that's the problem investors have to take into consideration.
But in general, this is the move of any beverage company, isn't it? It's we're going to acquire. We've got better distribution. So I mean, we've seen this with the soda companies. So why not with an alcohol company?
It's in the brands. I mean, it's your perception of the brand and how successful that's going to be. There's a lot of play for Southern California, Ballast Point especially, that Constellation is betting big on the move that they're going to make and that this brand is going to be successful. If it is, then yes, this could be a great acquisition, but I think we just need to be a little bit cautious of that, at least as investors.